Hey guys, welcome to Money Matters Daily once again. We're here on the 25th of May with some really interesting news stories and information to share with you. And if you find this interesting, please don't forget to leave a like and subscribe to the channel. Without delaying any further, let's get started. So here's a really, really interesting story. Now, very recently, the Confederation of Indian Industries, Shantikanta Das, the RBI governor, made a series of comments that the Monetary Policy Committee's actions will have to be guided by on-the-ground data, as well as they see some inflation risks. Now, let's deconstruct this and try and understand exactly what's happening here. So, just to give some context, the RBI, or the Reserve Bank of India, is to use interest rates to manage the inflation rate in the country and growth in the country. Higher interest rates reduce spending and encourage more saving and therefore control the inflation. And lower interest rates encourage borrowing and spending and therefore spur the growth of the country. Now, since January 2022, the RBI has been grappling with inflation, which has been above their 6% target as set by Parliament. This has been because of the huge amount of fiscal easing done by the US, as well as imported and energy inflation due to the Russia-Ukraine war. And since May 2022, the RBI has implemented 250 basis points of rate hikes. 1 basis point corresponds to 0.01 percentage points. So 250 basis points means 2.5%. And as it stands currently, the RBI's benchmark interest rate is 6.5%. A benchmark interest rate is nothing more than the interest rate at which banks can borrow or lend from the RBI. So the deposits that banks place with RBI earn 6.25%, and banks can borrow from the RBI at 6.75%. So just coming back to Shantikanta Das's comments, the main risks he sees for the Indian economy are the El Nino effect and the continued inflation scourge that we're all dealing with. Now, let's look at the inflation data very briefly. Over the last 2 months, particularly through April and May, inflation has been underneath RBI's 6% benchmark. First, in April, it dropped to about 4.7%, and it's expected to continue to stay at that level or drop even lower in May. And most recently, in May, in response to this positive data, the RBI paused their rate hikes. So while the US Fed was continuing to increase interest rates, the RBI did not increase interest rates any further. So let's maybe take a second and look at why that was the case and how bond markets responded. So over here, you can see that although through 2022, inflation was accelerating rapidly, through the second half of 2022 and through the beginning of 2023, inflation has stayed fairly stable. And in response to this rate hike pause, bond markets responded positively. So this is the Indian 10-year benchmark bond yield. Actually, what it is the cost of borrowing for the government on a 10-year bond. So you lend money to the government for 10 years and they pay you an interest rate on that money. So till March, the yields on India still rising. But ever since inflation data softened and there was an expectation of a slowdown in rate hikes, bond yields have come down from about 7.5% to 7%. And this is really positive because it means that there's a little bit more liquidity in the system, and growth can continue to stay strong. So I think we'll have to see how the RBI continues to act. I believe the next RBI Monetary Policy Committee meeting is on the June 6th and 7th, and we'll continue to hear more. But the key risk to watch over here is the El Nino effect and how that might impact food prices and agricultural production. But other than that, it seems like positive news for the Indian economy, where we're able to generate growth at 6.5 to 7%, and inflation stays beneath the 6% mark, maybe even beneath the 5% mark. And so interest rates can continue to stay stable at 6.5%, or maybe by the end of the year, beginning of next year, come down to 6%, 5.5%. We'll have to see. But very positive news and really great comments by the RBI Governor, Mr. Shantikanta Das. So pretty volatile day in trade today. The market was down for most of the day, and a late buying rally towards the end of the day pushed the market above its opening price. And this volatility was to be expected. Today is the 25th, which is the last Thursday in a month. And the last Thursday in a month is when all option contracts expire. So any traders that have opened positions, they try and close them before the last Thursday of the month, because otherwise it goes into delivery. Broad-based rally, most sectors except metals and PSUs were up, but metals and PSUs have been up for the last month, and they've performed positively. So pretty flat day in trade, but some really interesting news flow coming out, and we hope you enjoyed what we had to bring to the table today. And if you liked hearing about what we had to say, please leave a like and subscribe. And we'll see you tomorrow with more Money Matters Daily.